Hello friends. On 18th of December 2025, India's parliament passed single most transformative energy legislation since independence. Yes, the Shanti Bill 2025 doesn't just reform the nuclear energy as we know it, it creates a 15 lakh crore. Yes, a 15 lakh crore rupees worth of investment opportunity over the next 2 decades. Now, for the first time in 78 years, private companies, including potentially you as an investor, can now participate in building, owning, operating nuclear power plants in India. So now, if you are a serious investor looking for a multi-decade investment opportunities, whether you are an NRI investor, retail investor, high net worth individual, and you want to understand where the smart money actually is headed, this video is something that will give everything you need to know with regard to investing in the nuclear space. I am going to walk you through exactly what has changed, which stocks and ETFs would stand to benefit out of it, how European market is positioned, and most importantly, how you can build, yes, how you can build to capture this once in a generation opportunity. Now, welcome to Finogent Solutions, and we deliver institutional grade inputs for serious investors. Today's analysis is based on our comprehensive research done on the Shanti Bill. So now let us start with fundamentals. What exactly is a Shanti Bill? And why should investors actually care for it? So first we look at its name. Shanti stands for Sustainable Harnessing and Advancement of Nuclear Energy for Transforming India. But mind you, don't let the peaceful name fool you. This is legislation is actually revolutionary. It does three critical things. First, it repeals the Atomic Energy Act of 1962, which for 6 decades gave government complete monopoly over the nuclear power. Secondly, it repeals the Civil Liability for the Nuclear Damage Act of 2010, which made foreign equipment suppliers, yes, foreign equipment suppliers liable for accidents, a provision that secured away many major institutional nuclear vendors from doing business in India. So thirdly, and this is the game changer, it opens the nuclear sector to private players, private companies, joint ventures, foreign participation for the first time since independence. So now the question is, why did India need this? So let me give you some perspective. Right now, nuclear power generates just 3%. Yes, 3% of India's electricity. That's it. We have 25 reactors producing around 8,880 megawatts, and all are run by government companies, NPCIL. And NPCIL, despite its best efforts, simply cannot scale fast enough. India's target 100 gigawatts by 2047, and that is around 10-fold increase in 22 years. So the math is actually very brutal. To hit the target, India needs approximately 15 lakh crore rupees. That is about 180 billion US dollars. Now the government's entire nuclear energy mission budget for 25-26, just 20,000 crore. Now that is barely 1% of what is actually needed. So that is why private capital had to come in, and there is no other way it can do it. So now the important point is, as you guide you through all the investment details and the sectors that benefit out of it. So now you have to understand that there are 4 pillars of a transformative opportunity. First and foremost, there is a structural shift that is going to happen. Then there is a scale at which it is happening. So you can have an investment opportunity, but if you are not having a relevant scale, how you will make money in that? And then there is a domestic value or a chain activation that happens. And then there is a global thematic alignment. So now if we go through our first segment called as a structural shift, the Shanti Bill ends as 60-year-old monopoly, construction, ownership, operations, private and foreign capital at. Now, when we are looking at the scale, we are looking at 100 gigawatts of nuclear capacity by 2047. Yes, it is a 10 times expansion from an 8,800 gigawatts today, which requires an estimated of around 15 lakh crore of new investment. So now when we talk about the domestic value chain activation, you are looking at a multi-year capex cycle, which will drive significant order inflows for listed companies across equipments, construction, power utilities. So you are looking at this as one sector called as an equipment. Then you are looking at construction. Then you are looking at power. And then you are looking at utilities. So this is the domestic value chain that is being created. Then you are looking at the global thematic. Now this opportunity extends to global uranium markets. Yes, and also the small and medium reactors, SMR technology readers, which are accessible via established international investments framework. So there will be international investments aspect that will actually also be impacted because of this. So now, when we talk about Shanti Bill actually dismantling a 60-year-old monopoly, it aligns well with global investment standard. What does this mean? So let us see, when the Atomic Act of 1962 came, what was happening before? There was a capital gap. Now, the public funding was insufficient for a 100 gigawatt ambition. You don't have a public spending enough for that. Then there is an executional bottleneck. NPCIL monopoly is there, but there is a chronic project delays that is happening. So then there is a deterrent liability scheme, the 2010 Act supplier liability clause. It blocked the participation from the key foreign technology partners. So now, when you say that what has happened after getting the Shanti Bill for 2025 provisions, private and capital, private and foreign capital has unlocked. Now there will be JVs that would happen to build, own, and also to operate the nuclear power plants for that matter. When we talk about the international liability standard, the supplier liability is actually removed. The operator liability is also capped from 100 to 3000 crore, which is aligning with global conventions. So now technically, if you say that the nuclear sector itself is now being aligned as per global conventions. So lastly, when you're talking about the upgraded regulatory framework, what does this mean? The AERB is granted statutory status, and a dedicated atomic disputes tribunal is established for efficiency. So now when you are having a sector, then you also need to have the tribunal to actually settle the disputes, unless and until there is not a grievance. If there is not any sufficient grievance redressal mechanism, that respective sector cannot function. So that has also now been acted upon. So when we are talking about the growth, where we are currently at 8,800 gigawatt of capacity. We have around 25 operational reactors with us, and the contribution is just 3% of the total electricity. This is where we stand as of 2025. So now when we are talking about 2031, 32, that is around 4 to 5 years from now, which is a midterm target, we are looking at 22.48 gigawatts, which includes 11 under construction reactors. So now you had 25, you are now adding again another 11 one. And you are looking at investment of around 2 lakh crore here. But then fast forward it to 2047, which is also a time of the Viksit Bharat. We are looking at a capacity of around 100 gigawatts, that is 100 plus new reactors. Now imagine you have 100 nuclear reactors coming up. So therefore, how much of the investments will be required? Which companies will be involved? What are the materials that would be used here? So total investment opportunities being looked at is around 15 lakh crore. So what is the policy in action? The policy in action is Union Budget 25-26 has allocated an initial 20,000 crore for the nuclear energy mission. That shows an immediate government commitment to it, but it is actually less than 1% of what is actually required of the sector. So now when we are talking about, we are activating the domestic nuclear supply chain. What does this mean? Now here it is where it gets content oriented. That is, first we are looking at heavy engineering core components companies. They are the companies which are actually manufacturing the reactor, vessels, steam generators, critical components. So here we are looking at, one is the reactor, second is your vessel, third is your steam generators, and fourth are the components. So when you look at these space, we are looking at the key players like L&T Limited, BHEL, and Walchan Nagar Industries, and all such players. So this is heavy engineering. So when you're looking at precision engineering or fuel cycle, there we are looking at, it is a supply of specialized nuclear grade components. Specialized and nuclear grade components. Now, what are the players that work it? There is MTAR Technologies, Azad Engineering. So when we are looking at infrastructure construction, so you are having an engineering component, you have specialized nuclear grade providers, but then you also need to have an infrastructure and the construction players. That means which are involved in the civil works, plants construction, and the project management. When you look at these, the HCC Power Mac projects are the ones, they are into the same space. And then there is a power utility and operation, that is a JVs for plant operations as a power generation. Then you have the NTPC and the Tata Power coming in. So when you're talking about the overarching insight, the shift from a single buyer NPCIL to a multi-buyer market will create a very competitive bidding and the robust multi-year book for the entire ecosystem and the sector for that matter. So this is whole domestic chain that you are actually looking at. So now if we can look at the tentative list of the key beneficiaries that would come out of it, would be, say for example, the BHEL. BHEL is into equipment manufacturing. We are looking at a MOU with NPCIL for the PHWR technology. 92,534 crore order book had been there in FY25. So if we go to the second player called as the L&T, we are looking the space which is called as a heavy engineering, and it is an established supplier of the nuclear grade equipment and the reactor components. So at NPCIL, it is already providing that. Then we are looking at NTPC Limited, which is a power utility. It has 49% stake in Ashwini JV with NPCIL again. It plans 30 gigawatt nuclear capacity of 62 billion investment. Then you have HCC. It looks into infrastructure space, nuclear infrastructure specialist, recent NPCIL order of around 1.27 crore. This was around February 2025. Then we are looking at Power Mech, which is again into construction. It is into 563 crore contract with Kaiga Atomic Power Project, May 24, civil works with PHWRs. You have then Tata Power that is coming up, utility BSR, submitted response to NPCIL, bar a small reactor. So you now have Azad Engineering, again components, partnership with Arbeli Solutions, 340 crore global supply chain agreement for the nuclear components. Now the additional ecosystem exposure includes your MTAR, Volchan, Patel's Airtem, Kirloskar Electric, DP Wires, and all these players, and even for that matter, Triveni turbines, because the turbines are required in these things. So when you're talking about the beneficiaries, the list is actually big. These are some of the focus areas which we believe would be the beneficiaries of this unlocking of opportunities into the nuclear sector. So when we're talking about the European bull market, we are looking at a structural supply deficit is driving the prices higher. So when you're looking at uranium, okay, let's see how the uranium goes, because when you're talking about the crude or you're talking about dollar, you always see what is the supply and the demand. So what is in the space of the uranium? So there is a supply deficit that is actually going on. It is a structural supply deficit. What does this mean? If we look at December 2025, the spot price is around $80. Now then the highest 2025 after 28 consecutive months increase has been around $85. So if we look at the price forecast, which has been as a part of the consensus by the mid 2025, we're looking at 90 to 100. So if you look at supply gap, mine supply covers only 75% of the reactor demand. So only 75% of the reactor demand is being met. So rest is actually an opportunity. So therefore, what are the demand drivers? So if we see that again, 2025, we are looking at this December, and then in mid 2026 as we are anticipating the increase. Now when we are looking at the demand drivers, now the global new build, 65 reactors are under construction, China, India and Korea. AI and data centers. Now, yes, Microsoft and Google are signing the nuclear PPAs, $80 billion Westinghouse deal for AI power. So while you're talking about the AI, you don't know what all transactions and deals are happening behind the AI. So they are also willing to secure them energy, because energy is the new currency that is going to run the world. So then there's a reactor restarts and the life extensions. Policy reversals. You have seen policy reversals happening in Japan and Europe. These are the demand drivers. Then we are looking at the supply constraints. Now producer cutbacks. Now if you say the Custom-Prom, that is the world's largest, it is guiding a 10% output reduction for 2026. So like you have seen in crude also, they cut the crude production. So second, there is a development lead times. Now new mines actually require around 7 to 10 years and the incentive price of around 80 to 90 dollars. So development lead time is also a challenge or a supply constraint. Now, when we talk about the SMR, small and medium reactors, so it is not necessary you have to put the whole big power plant. Now, the focus, the new technology is going on in case of the small and medium reactors and international partnerships. Now, they are the technology catalyst for faster developments. Now, if we would see that, how that goes with different countries like USA, France, and the leading SMR innovators. Now, the Holtec has approved the SMR technology transfer March 2025. Now, Westinghouse AP thousands planned for Covada 6 times. Yes, 1208 megawatt capacity. India's relevance is the partnership for the massive 9.6 gigawatts for the Jaitapur project. Now, the new letter of intent for, so when we are looking at who are the leading SMR innovators, we are looking at New Scale Power. It's the first US NRC certified SMR. Yes, potential partner for Indian development. Now, second partner would be the GE Vernova. It is a BWRX 300 SMR deploying globally, potential service partner for India's fleet. Now, the Shanti Bill specifically enables the deployment of SMRs and indigenously designed Bharat small reactors. द एसएमआर स्मॉल एंड मीडियम रिएक्टर दूसरा है जो इंडिजिनियसली डेवलप किए गए हैं जिसको हम कहते हैं भारत स्मॉल रिएक्टर्स. इट क्रिएट्स अ न्यू मार्केट फॉर द इंडस्ट्रियल कैप्टिव पावर फॉर दैट. सो देयरफॉर अब बात आती है कि इफ यू एज एन इन्वेस्टर वांट टू take advantage of the nuclear exposure to make returns over the periods intergenerational, so what should be the framework? The multi-asset framework that bigger players like ultra high net worth take is, first is your direct Indian equity. So you can say that, okay, we can have a concentrated exposure to domestic supply chain leaders, which are the BHEL, NTPC, and LNT for that matter. That is one aspect. The second aspect would be, okay, let's look at global uranium and nuclear ETFs. Yes. Now, this is the diversified access to the global miners, component manufacturers, and the utilities for that matter. So, either you can go for an Indian-based directly stocks which are involved in their developments, या तो आप उसके बाद global uranium में आप जा सकते हैं कि ETF से exchange traded fund जो इस space पे काम करते हैं. Third option that you can look forward is the alternative and thematic funds. What does this mean? It is a broader indirect exposure via Indian mutual funds, AIFs, and the PMS strategies with the energy or infrastructure focus. So, if there are any funds which are from the alternative space focused on this sector, so you can benefit out of them. And the fourth is global SMR technology stocks, small and medium sector stocks. So these are targeted investments in next generation nuclear technology and the few leaders like NewScale, Genova, Camco. कहने का मतलब यह है कि अगर आप डायरेक्टली स्टॉक्स उठाना चाहते हैं तो ये आप कर सकते हैं अपने डीमैट ट्रेडिंग अकाउंट से. आप ग्लोबल ईटीएफ्स उठा सकते हैं, एआईएफ पीएमएस उठा सकते हैं या ग्लोबल स्टॉक्स उठा. फर्स्ट, ग्लोबल न्यूक्लियर एंड यूरेनियम ईटीएफ्स. सो यू आर लुकिंग एट URA, NLX, URNM, and URNU. The second option that we are looking are global SMR and the nuclear technology stocks. You can say take NewScale, Genova, Camco, and VW. Now, these are all tradable on different exchange, and these investments can also be made by the investors who want to make an exposure. Now, your broader asset allocation can be like this. But internally, what stocks you have to select, you can make it from, you have to take it from that universe because you are actually making a nuclear portfolio. So therefore, then the thing comes, if you are an Indian NRI investor, how you can do that? Now, you have different asset classes for that matter available. One is the Indian equities. So you are talking about Indian equities. There is an NRE NRO account you could have, and you could have a PIS account with like to that, and you can take a delivery based trades. There might be certain sector limitations, but you have to ensure that your FACTA and the CRS compliance are mandatorily taken care of. Second option is Indian mutual funds. Again, from NRE and NRO accounts, you can do it, investors. The third option we are looking at is global ETFs and stocks. So the brokerage account in a country of residence. So now, if for example you are staying in US, you can say, okay, I am already having a portfolio. Let me do and invest from here on my own. So it's a straightforward process, and then you are not subject to the LRS limits. Now, when we are looking at the NRI investors for the limit, we are looking at remit up to 250,000 per person per financial year for the foreign investments under LRS route. The documentation is that the 20% of the tax collected at source would be there. You have to submit form A2 and your PAN to an authorized bank dealer for each remittance. There is a TCS implication. Although it might cause a certain liquidity issue and not having an interest for that money for that specific period in time, but that can actually be taken care of if you plan well. So if you're now looking at the risk assessment matrix, yes, what are the risks you are looking at? We are looking at the execution risk. That means nuclear projects are complex and they face chronic delays and are regulatory hurdles involved into it. That means a private sector mitigating factors will be private sector efficiency is there, so governments might get stuck, but private enterprises are faster in their implementation. There's a proven international partners for that. You have a streamlined regulatory bodies. If you talk about the assessment, it is moderate to high risk. When you talk about the policy reversal, that means if in future any future government comes and they modify the privatization and they say, okay, we want to do a policy reversal for that. So that could happen. Now, the strong cross-party consensus, if is there on climate and energy security, then the high sunk cost also deter the reversal because पैसा लग जाता है, वो पैसा कहाँ से फिर वापस आप करोगे? लग गया तो भाई इसको थ्रू कर दो. So therefore, it is low to moderate as far as we consider India at this point in time. Third is your nuclear incident. A major safety event globally could trigger the public backlash and the policy change. when you're talking about the uranium price, because that is the fuel that is being actually used, the commodity price volatility can be driven by the geopolitical supply disruption. So therefore, if tomorrow there is a uranium supplier and they are not willing to provide that energy supply to India because of the global tensions, or that it is not quite in sync with Indian policies. So therefore, that could actually drive prices. So therefore, the structural price deficit, long-term contract pricing offers stability, diversified ETFs, and it reduces the single minus risk. We are looking at the moderate level of the risk assessment here. तो अगर हम करेंसी रिस्क की बात करते हैं, INR depreciate होता है, it affects the returns on the US dominated LRS investments. Historically, long-term INR depreciation trend provides a tailwind for the USD assets. अभी तक तो ये हमारे लिए beneficial रहा, but then again if it reverses, like many times it is said that कि नहीं आगे जाके तो ये reverse होने वाला है और Indian currency वापस थोड़ी सी stabilize हो जाएगी, so then you have to see that how that currency risk actually plays up. So now here comes the main thing when you're talking about the strategic view of how all these things actually look forward to. Strategic view is we are looking at a diversified long-term approach to nuclear exposure. So now, if you look at the Shanti Bill, it represents a multi-generational policy shift that creates a multi-decade investment opportunity. हमने already बात की है कि 100 gigawatts का हमारा target है that we are actually looking at. So therefore, जो portfolio construction चलता है वो कैसा होगा? We can look at 40 to 50% allocation to Indian nuclear supply chain. Global uranium and ETFs could be 25 to 30%. SMR technology stocks could be 20 to 30%. And the Indian thematic MFs and AIFs could be around 5 to 10%. And one thing you have to know that for every investor, this is a model portfolio I can think of, because when you're looking at it, you cannot put all your savings, because if AIF is itself a minimum 1 crore of the investment. So technically, if you say that 1 crore of the investment is the 10% of my portfolio, then that means we are talking about 10 crore of the total portfolio. None of this is actually a recommendation. It is how technically, if you want me to, how can we put the asset allocation and see how it works. So this is, so even in the nuclear space, you have different players that are actually placed here. So you have at one point Indian nuclear supply chain players, you have SMR technology stocks, that is small and medium reactors, and then you have global uranium suppliers, that is the fuels we are talking about, and then there is a diversified bucket through AIFs or even the mutual fund space. If they are providing an exposure to this, like we didn't have defense stock, then we get the defense. We didn't have the silver ETF, but we then got a silver ETF. But now since the policy announcement has come, so within Indian also the mutual fund space, and they will also be coming up with their funds in the due course. However, you can still get exposed to the global ETFs for that matter if you want to. So investment horizon, we are talking about the 5 to 10, but technically if you ask me, it is around 10 plus years we are looking at, because that too still minimum I would like to say. So none of this should be construed as an investment advice. I hope that when we look at the nuclear bill as it come, the Shanti bill, many times हमें क्या होता है, हमें होता है यार बिल आ गई है, चलो इन्वेस्ट कर ले, किस पे करें, LNT में कर लेते हैं, BHEL में कर लेते हैं, and all. Very small part of investment landscape when the whole nuclear ecosystem is actually concerned or even considered for that matter. So therefore the question is, you have to look at a broader picture and then see how actually the asset allocation has to be done. Thank you so much. This is RAJAT DHAR signing off. Have a great day.